I discovered Bitcoin 30 years into my career. So I started a company late 1989. For 30 years, I'd been running an enterprise software company, MicroStrategy. We brought it public on the NASDAQ in 1998. Initially, we were focused upon one line of business, which is to sell software that allows banks or large retailers or insurance companies to analyze all of the data in their databases and assess risk and come up with marketing campaigns. Or if you wanted to figure out what sells with what and do market basket analysis or any kind of risk assessment, and you're a large enterprise, you would want to build a proprietary analytical system. We call that business intelligence. So that was successful. Then I was in my expansionary era in my 30s and in my 40s, and I wanted to create lots of things. And so I launched 10 other businesses. I bought up all the domain names like angel.com and alarm.com and strategy.com and hope.com. And I launched businesses, and some of them were singles, some were doubles. I bought voice.com. I sold it for $30 million. I sold the Angel business for about $100 million. The alarm.com business, we spun off. It's a multi-billion-dollar publicly traded company today. And then I launched, I don't know, a dozen other things. They just whiffed. They failed.
What was your hit rate, just out of curiosity? Can you estimate it?
I would say that the thing I started with turned out to be the biggest success between 1990 and 2020. And then the next idea was a small, was a double, and the next one was a single, and the rest sputtered out. I spent a lot of time. They were my favorite idea, a great idea. I loved them. I invested a lot of money in them. It turned out the world didn't think the same way I did. I either overcomplicated it. And so it's an important part of the story, because by 2010, we had overexpanded as a company, and we'd launched, I wanted to be the conglomerate, 10 different things. And I found that the one thing worked and the other 9 things didn't work. And I needed to focus. So we refocused on the core business. And for the next decade, I had 2 dual experiences. I had the experience professionally, and I had an experience personally in finance. Here's the professional experience. I worked 2,500, 3,000 hours a year with 2,000 people doing 100,000 things right. I tried everything under the sun. We had a $500 million enterprise software business, and we found that we were the winner. 99 out of 100 of our competitors, or 99 other competitors, had gone bankrupt or left the industry. We were the winner, and we were competing against Microsoft. And Microsoft is Microsoft. Mm-hmm. And so we were the pure play, call it the David against the Goliaths. And so for the next decade, I spent huge amounts of money on development. It didn't work. I spent huge amounts of money on marketing. It didn't work. I rebuilt every information system in the company. It didn't work. I obsessed over systems for HR, obsessed over systems for sales, for marketing. I spent huge amounts of money on digital advertising, everything you can imagine. I would fly around the world. I flew around the world for a month, and I talked in every city, everywhere, in order to get the message out. So I had tried every conventional thing imaginable, and 10 years later, the company was still about a $500 million company. We were like a very low growth, and we were banging our head against a company, Microsoft, which is more you could more easily leave the United States than you could leave the domain of Microsoft. They're just everywhere. So my professional experience is, I figured I'm not a stupid guy. I worked very hard. I had brilliant people working with me. We tried everything imaginable, but we could not dent, the digital monopolies of the world. And we were this, I'll call us a zombie company. It's a publicly traded company that makes money, that won't go out of business, that's uninteresting because it's not growing 20% or 30% a year. It's not Google. It's not Facebook. It's not a monster. But there are 10,000 companies like ours.
Right.
Most companies are like ours.
Sure.
So we were there. And then here's my personal experience. I got very fascinated with technology. I wrote a book called The Mobile Wave. And in The Mobile Wave, back I
That was
started writing
2012, that
I
book?
published it 2012. I wrote it 2010, 2011. And the theme of the book is what happens when software dematerializes, when the software runs on a phone, when the computer goes from under your desk to in your hand, when it's no longer solid state or liquid state, but it's vapor state, and you go to sleep with the phone next to you. What kind of software would happen in the mobile world? And of course, we know all about it, right? The Instagrams, the Facebooks, the Ubers, all of these things became possible during the mobile era. They were inconceivable when the software ran on a computer. So the theme of the book is, software is going to leap from under our desk to our clothing. We'll wear it, we'll hold it, and it's going to become ubiquitous 24/7, 365, and it's going to change. We're going to dematerialize 27,000 devices. 20,000 device companies died so Apple could live. We're going to crush 20,000 retailers because everybody's going to want the Amazon. You're going to see 20,000 newspapers crushed because Google and Facebook eats them. And, the message of the book is, you probably ought to just buy the Amazon stock or buy the Apple stock. And as an investor, I took, a decent amount of money, call it $25 million that I'd made over the previous 20 years as a CEO and as a founder of a company. I invested in these stocks and I 20x'd it. If how do you make money in the tech world? You invest in something everybody needs, nobody can stop, and very few people understand. Like most people will, in the year 2010, if you had said, hey, I really think that Amazon's going to work, people would have said, you're crazy, Amazon's losing money, no one's going to do this, and they would have thought you're nuts. And if you had said, I remember with Apple, you say, well, Apple, I think this iPhone's a cool thing. They would say, well, no, eventually it'll go to the price of $25 a phone like Nokia. It's going to be commoditized. They can't hold, their margins are too high. They're going to actually have their margins collapse like Dell or like Nokia. And of course, the conventional wisdom was Apple's not a good investment. Amazon's not a good investment. Facebook, what is this goofy thing? And of course, for the next decade, here's what happened. I work an hour a month as an investor and I get rich. Make $500 million. Not working, embarrassing. All you got to do is just buy the Magnificent Seven in 2010. And the conventional wisdom on Wall Street is, if the stock doubles, you should diversify. You should sell half of it. If Apple doubles in price, go buy some IBM and some HP and some other computer company. If it doubles again, you sell some more of the portfolio and you buy the thing. And their thought was, you got to stay diversified. But the problem is Apple won, everybody else lost. At one point, Apple made all the money in the mobile phone business. Everybody else collectively lost money to compete with them. If you look at the winners in this era, right? I mean, Apple was a winner. Amazon was a winner. Google, Facebook were a winner. Samsung is the winner in the Far East. Walmart kept up. Every other retailer, it's like there's two or three that kind of keep up. Maybe a Walmart, maybe a Target, but there's 20,000 that went out of business. When wherever you're living gets too crowded and there's too many bureaucratic busybodies telling you how to live and how to breathe and what to do, it's time for you to
find a new frontier.
Go somewhere else.
Yeah, right.
Go west, go to cyberspace, go to in his case, go to outer space, right? So Thomas Kuhn, in The Structure of Scientific Revolution, he introduces this idea of the paradigm shift. And what he notes is that when a new paradigm comes along, it's embraced by the youth. Or
all the people who held the old paradigm died.
And the only reason the adults ever embrace it is a war. So, and there's the famous phrase, science advances one funeral at a time, right?
Yes.
So we're waiting for the old guard to die, but the one time when it's possible for an old dog to learn new tricks, if you will, is when there's a war. So when I first saw Bitcoin, it was 2013. I was fascinated by Apple, fascinated by Amazon, making a lot of money in my private investments. That was my tech ride. And I was working hard in my business, and I had 20 things that I thought I was going to do to fix that business. And I looked at Bitcoin. I was like, well, this is an interesting thing, some decentralized monetary system. But, right around then, the government shut down. There was a online betting site called Trade Sports. And you could go and you could bet on the outcome of anything. You could bet on the outcome of elections. You could bet on sports. You could bet on whether it's going to rain. And it was kind of a cool idea. The government shut it down because a lot of times when remember they shut down online gambling. I was watching this in 2013. I looked at Bitcoin and I tweeted very famously. This is back when I tweeted, but no one cared. So I aired my opinion, and my opinion was, Bitcoin's interesting, but I think it's going to go the way of online gambling. Okay.
Oh, you think it'd be shut down?
I thought it was going to be shut down.
Oh, yeah.
I dismissed
that was a likely outcome.
And in my defense, right, a lot of good arguments why, and it wasn't until 2014 that the IRS designated Bitcoin as property. 2013, it was unclear what it was going to be designated as. But in any event, I did it. I forgot about it for the next 7 years. I went off, and we roll into March of 2020. And in March of 2020, this entire COVID thing developed, right? So first, the world shut down, and I'm not happy about it, and I don't agree with it. So the company had one more ace. The thing that we had in our back pocket that kept us, that we had relied on, was we had $500 million in cash. I have 2,000 hardworking employees. I have an operating business that's a cash cow, and I have $500 million in cash. And that cash, in the best period, back in 2010, just before the great financial crisis, or, in that range, interest rates got to 5%, 5.5%. And, maybe you can make $25 million a year on that. And then interest rates got hammered down. The central bankers kept printing money, and they actually forced the interest rates down. I didn't understand that they were manipulating the interest rates to make them lower during that decade. I was a techie. I would say I was very technically sophisticated, and I was very good at running a business. I was in the category of work very, very hard and know my business. But what I didn't understand was money, and I didn't understand banking, and I didn't realize that as hard as I was working, they were taking it out the back door through inflation. So the interest rates are maybe 2.5%. As we roll into the year. And here's what happened. COVID lockdown takes place. There's a massive panic. All of these stocks crash because we're shutting down the world for the next 2 years. Of course they should crash. And, the administration looks at it and the hue and cry comes from the mainstream media and from the leaders in business and from the politicians. Lower the interest rates. So Jerome Powell turns around and lowers the interest rates, and pretty soon we've got interest rates going from 250 basis points, like overnight rates, to zero. Well, what happens to the stock market? And this is the most perverse thing imaginable. By the summer of 2020, all of the stocks have recovered. It's like, oh, we had a crisis, but we solved it by taking the interest rate to zero. We printed money. And the stocks recover. Amazon's recovered, Apple's recovered, Disney is trading higher. People are basically taking Disney up to double, and they're trading it based upon forward expectations of Disney streaming video revenue in year 2024. And I'm watching this. And this was what happened in 2020, I would characterize as a bifurcation of Main Street and Wall Street. What you saw was Main Street was destroyed by these policies, right? Main Street got shut down. The private manufacturer, the person that works with their hands, the guy that shows up, the small business, the mid-sized business. This is the Trump constituency, by the way. These people get destroyed, right? And they're wiped out. Like, okay, it's illegal for you to open your gym. You're going to jail if you go to work. Okay. Yeah. And then Wall Street was, you got guys running $5 billion equity investment funds living in New York and the Hamptons. They had the best year of their life, Jordan. 2020 was the best year in 30 years for these investors. They're making, all you had to do was be holding the stocks or playing the market. When interest rates go to zero, the P to E of any company that generates cash goes, it doubles, it triples. the cap rates on real estate doubled. So the perverse irony is you own a building, no one's in it, the value of the building doubles in 4 weeks.